All right, Simon. So today we're diving into what I think is the question that trips up almost everyone when they first start investing. Do you buy individual stocks or do you go for ETFs? I'll be completely honest, when I opened my first brokerage account in Newbury, I genuinely thought, okay, I need to find the next Google or Apple, like pick the one thing that will shoot me to the moon. Turns out I was staring at BP and Tesco, panicking, thinking I had to become some genius stock picker overnight.
Yes, that's something I hear all the time. And it's just so tempting, isn't it? You see those stories of people who bought Amazon in 1999 and now they're, hosting podcasts from their private islands. But the reality is a bit less glamorous. Let's just get our definitions in. So, a stock, it's just a share of a single company. You own, say, a slice of Apple or of BP, and your fortunes rise and fall with that business.
Exactly. And then along come ETFs, which, this is the best analogy I ever heard. It's like going to a buffet instead of ordering one dish. An ETF's a basket, right? You buy one share of the ETF, but you're actually getting exposure to hundreds of companies. They track an index like the FTSE 100 or S&P 500, or even a whole theme like clean energy. You're spreading your risk the second you're in.
Right, so where a stock is basically a solo act, an ETF is like an orchestra. You're not betting all your money on one company's next product launch. You're letting many companies work for you all at once. And honestly, diversification is, as they say, the only free lunch in investing. Nobel Prize winner Harry Markowitz, I believe. Anyway, the big point. With stocks, you might win big, but you can also lose everything. With ETFs, you're smoothing out those wild swings.
Yeah, when I learned about ETFs, it was honestly a relief. Suddenly, it wasn't about can I pick the next big thing. Instead, it's can I just own a little of everything and get on with my actual life. It just made investment feel less like gambling and more like sensible financial planning and wealth building, you know?
You've hit on something there, Elizabeth, because for most people, the emotional side of investing is the real killer. You buy a stock, it goes up. You're thrilled, it drops, you panic and sell. With ETFs, though, you get built-in diversification, which lowers your risk, and the fees are absolutely tiny, often less than 0.2% per year. That's basically nothing, especially compared to what you'd pay for someone to pick those stocks for you.
And it's honestly a time saver too, isn't it? Who has the hours to sit there poring over company reports, trying to figure out if the new BP CEO is a genius or a total disaster? I certainly don't. ETFs just mean you can put your money to work and not have to check your portfolio every 4 minutes.
That's so true, and people often underestimate how hard even the pros find it. There are entire teams of analysts around the world, and statistically, most fund managers still can't beat those simple indexes that ETFs track. If those folks are struggling, it just shows how tough it is for the rest of us. For the average investor, if you're stock picking, you actually tend to underperform the market, not outperform. The data is brutal and telling on this point.
Absolutely. And we've got that case study in front of us. 2 investors with £10,000. Investor A goes for the ETF tracking, say, the MSCI World. Investor B thinks, I can pick 5 stocks, surely one of these will break out. 20 years later, the ETF investor's portfolio is chugging along 7 or 8% a year, slow and steady, while that stock picker might have had a wild ride with some big wins and some total disasters and ended up with less, sometimes way less.
And the best part is the ETF investor is probably sleeping better at night. They weren't glued to the FTSE ticker, stressing about every quarterly earnings report. They just let compounding do the heavy lifting for them, year in, year out. No drama.
Yeah, and I think that's overlooked. It's not just what the returns are, it's the emotional roller coaster you have to put yourself through to get them. ETF investing is just a more peaceful way to build lasting wealth for most people. So let's shift gears, Simon, and talk about exactly how people can get started building wealth with ETFs. Because honestly, it couldn't be simpler. First step, you choose a platform. Look for a low-fee broker, ideally one that offers fractional shares and lets you automate your monthly investments, so you're not having to constantly think about it.
Spot on.
Step 2 is just as easy. Pick a core global ETF, something like the FTSE Global All Cap or the MSCI World, which already gives you exposure to thousands of companies all over the world. That's your foundation. You're diversified the moment you buy in.
Then you set up a monthly direct debit or auto investment. Even if it's just £50 a month, that regular investing over time is what really compounds into something substantial. And the best part, you can just leave it. Ignore the headlines. Don't stress when markets wobble. Wealth isn't built in a day, it's built by being constant and consistent.
Exactly, and you get bonus benefits. A lot of ETFs pay dividends, so you get some passive income without hunting for individual dividend stocks. They're tax efficient too, especially compared to trading lots of stocks in and out. One of my clients, after years of trying to chase the next hot stock, finally just set it and forget it with a global ETF. The change was incredible. He stopped worrying about crashes and, he actually started sleeping through the night for the first time in years. Really.
That's brilliant, Simon, and it's what makes ETFs such a revolution for ordinary investors. You get access to global markets, professional-level diversification, and you don't need to be glued to the news. Honestly, setting it up is the hard part. After that, you just let time and the markets do their thing.
Definitely. And remember, there's nothing stopping you from having a bit of fun on the side. If you want to sprinkle in a stock or two for excitement, fine, but keep that ETF as your foundation.
Exactly. Your core is for building wealth. Your fun money can be for the odd flutter, but it's that consistent, constant, boring, diversified ETF portfolio that's going to do the real heavy lifting over the years and potentially decades.
Well, I think that's a perfect place to leave it for today. We've covered how ETFs work, why they outperform stocks for most people, and how to set up a solid ETF-based portfolio. Elizabeth, always a pleasure talking this stuff through with you.
Always, Simon. I hope everyone listening's feeling a little more confident about the ETF route now. We'll be back next episode with more strategies. So if you've got questions, send them over and we'll tackle them together. Take care, Simon.
Take care, Elizabeth. And thanks to Yemi Agbebi, the executive producer of this pivotal series on building wealth. And last but not least, goodbye to everyone listening. Happy wealth building.